Welcome. Today is Thursday, January 11th. I'm Jeff Hughes, Chief Investment Officer at JWH Investment Partners and the founder of Alpha Insights. And this is your Daily 5. Today, we're going to discuss Bitcoin and the implications of the launch of at least 11 new Bitcoin ETFs today. But first, what I'd like to do is just bring your attention to the fact that we just published our latest issue of Huge Insights, The Big Picture on Saturday, January 6th. This was our 2024 investment outlook issue. It's the biggest issue we publish every year, just giving our readers perspective on the global macro outlook and the implications for markets for the next 12 months and where we think things are today and where we think they're headed over that period of time. For those who are not familiar with our work, we do publish an investment newsletter. It goes out monthly on the first Saturday of every month. It's free to subscribe. And if you subscribe via Substack, you can go to hugeinsights.substack.com and it'll be delivered to your inbox on the first Saturday of each month. And you'll get a free look at the first 4 to 5 pages of the newsletters, typically about 20, 25 pages long. 30 to 40 charts. The newsletter is affectionately titled Huge Insights, The Big Picture, because what we focus on in the newsletter are macro factors affecting the economy and affecting the markets. We're looking at the big picture. We're not stock picking per se, although we do usually throw out a fat pitch at the end of every issue. So we do give you an idea to take action on at the end of every issue. And we do get a lot of inquiries from people. Hey, I really love your stuff, Jeff. How do I take this information and put it into action? And so for those who want more, there is an option to upgrade to paid for as little as $12.50 a month. This includes not just the monthly forecast, but also our positioning recommendations. And paid subscribers also receive our weekly Alpha Insights Idea Generator Lab publication. This is an institutional publication that goes out with our institutional service normally. But what it does is it details our top actionable trade idea each week and provides some updated market analysis and commentary. That goes out every Wednesday after the close. And then in addition to that, we do have some additional privileged access to periodic interim bulletins and quarterly video content. So there's a lot of perks and a lot of value. If you're interested in taking a closer look at what we're doing in terms of our real deep dive work, you can go to hugeinsights.substack.com and sign up to get our newsletter. So we'll leave it at that, and let's jump right into Bitcoin now. Chart number 1 takes a look at really the entire trading history of Bitcoin, spot Bitcoin, if you will, as far back as StockCharts goes, and that is to 2014. I know Bitcoin actually came into being long before that, but this is when it began, trading, I guess, effectively in such a way that we could be confident in the price action. And StockCharts is willing to go back as far as 2014 to give us that look. But from what we can tell, when we knit everything together, is that when we peaked out around 68,000 or so, that ended 5 waves up at primary degree of trend. And we need to correct that 5-wave advance. Now, we've detailed our Elliott wave count here in a number of ways. We've got the 1, 2, 3, 4, 5 in parentheses. That's primary degree. You could see the 1, 2, 3, 4, 5 without the parentheses leading into that 5th wave top. And that counts very clearly as well. And then from that 5th wave high at 68,000, we count 5 waves down to end primary wave A down. And we've subsequently seen a nice counter trend advance. It's been an ABC form advance. It's been in a parallel trend channel. Some might call that a bear flag. We think that's an apt description because what's likely happening today on the news that the SEC announced last night that it has approved the first US listed ETF to track the spot price of Bitcoin, we think that's likely to mark a high. Why do we think that? Well, every time we've seen these, I guess let's look at it this way. Every time we've seen evolutions in Bitcoin, we've seen the market top. But let's step back just a second here and take a look at the fact that at least 11 new ETFs are slated to begin trading today, Thursday. And, a lot of people believe that this is a watershed event and that it's going to lead to mass adoption of Bitcoin as a major new inclusion to portfolio asset allocation models, either at the advisor level or the institutional level, something beyond the current market, which is predominantly retail. But history says otherwise. Past exchange traded innovations in Bitcoin have been met with aggressive selling, as crypto advocates have pretty much tended to buy into the hype and the news or the rumor and sell into the news and the event. And the evidence of that is clear. We can go back to December 17th, 2017, when the CME launched their first Bitcoin futures contract. That marked the exact high of primary wave 3. And from that point, we saw an 84% decline into primary wave 4. The next big event was when Coinbase launched their IPO on April 14th, 2021. That was at intermediate wave 3 of primary wave 5 up. And off of that high, we saw Bitcoin drop 55% almost immediately after the IPO of Coinbase. Now, that put in the low, which we're counting as intermediate wave 4. And the next rally up to the intermediate wave 5 of primary wave 5 high was met with ProShares Bitcoin Futures ETF launch. That was on October 18th, 2021. And almost to the date, Bitcoin topped near 68,000 and reversed its trend aggressively to the downside in 5 waves, which we believe is an impulse pattern, which represents a directional change of trend. That we are marking as primary wave A down. And by the time wave A ended, Bitcoin had dropped 78%. Now we've seen quite a rally. A lot of Bitcoin advocates are getting behind this, saying this is a new bull market in Bitcoin, and that this new watershed event is likely to basically mark a dramatic new advocacy for Bitcoin. And we think it's going to be quite the opposite. This approval of these multiple spot Bitcoin ETFs yesterday, January 10th, 2024, likely marked the high. And today, what we've seen so far is we saw, a rather enthusiastic rally of some $3,000-4,000 advance in Bitcoin to a new high, or recovery high, I should say, of around 49,000. Now we've since sold off from that high, and the last trade looks like it's around 46,000. So pretty much where it was before the news hit. And so we're not really seeing that epic follow through that the advocates were suggesting, but in fact, we are seeing exactly what's happened in the past. We've seen, Bitcoin traders buy into the hype and sell into the event, and we think that this is likely going to mark an epic top. We're calling it primary wave B of an ABC, and we think before it's over, we should see Bitcoin drop by about 84% to its larger degree trend channel boundary, which we think will likely mark primary wave C down, and the end of the correction, which will then set up Bitcoin for a much, much bigger move to the upside. Now, where will that low come into play? We think somewhere between, say, around 7,500 and 10,000. That's about as close as we can get in terms of a projection. Indeed, it is our opinion that the launch of these ETFs likely marks a top here. And so, our Elliott wave count implies this significant downside. And basically, if wave C is equal to wave A, then the price will reach the lower boundary of that large degree trend channel before the correction is complete. So that's what we have to say about Bitcoin per se today. Let's take a look at chart number 2. Chart number 2 really illustrates the correlation between spot Bitcoin's price and the NASDAQ 100. Now, we put out a weekly chart overlaying the Bitcoin in red relative to the NASDAQ, which we have as a candle chart. And in the lower panel, we're showing the correlation. And, we've long postulated that Bitcoin represents the ultimate speculation. It's really the tulip bulb of the 21st century. Aside from its scarcity value, in our opinion, Bitcoin has no utility, certainly none that's been demonstrated. And so, what we've seen here is that since at least 2019, Bitcoin has maintained a positive correlation with the NASDAQ 100, which currently hovers around 70%, 76% right now. And we've been saying this for a while, but as goes Bitcoin, so goes the NASDAQ. And so in our view, this relationship really speaks volumes about the level of speculation in both Bitcoin and NASDAQ growth stocks. Both asset classes are heavily driven by bullish narratives about changing the current world order. The Bitcoin bros are out there saying that Bitcoin will be the new reserve currency, and the NASDAQ growth stock bulls really see the NASDAQ 100 as a proxy for the virtues of artificial intelligence. And, our view is this: we doubt that the incumbent world order is going to go quickly or quietly. So, we think that these are dreams and hopes that probably have little chance of coming to fruition in certainly the immediate future. So let's take a little bit closer look at why we think that. One of the reasons is that net speculative long positioning has now reached an epic peak. Certainly more to the point, investors are probably a little too far over the front of their skis at this point. The CFTC data definitely supports that conclusion, as net speculative long positioning in NASDAQ 100 futures is now at a new all-time record extreme. This cohort rarely gets it right, speculators. And when their conviction reaches extremes of this magnitude, it usually marks an impending major trend change in the immediate future. So, to be sure, total open interest in NASDAQ 100 futures have begun to reverse from record levels. And this is consistent with market behavior that's coincided with past market tops. So if the level of speculation evident in the NASDAQ 100 is also at play in Bitcoin, then we should expect Bitcoins to decline furiously over the coming months. And perhaps, this last upside reaction that we saw today on perceived favorable news marked the high. We'll have to see about that, but that is our view on Bitcoin and how it relates to speculation in the NASDAQ. Let's take a look at chart number 4. Insiders are selling their shares. So there's one group of investors out there that is far less enthusiastic about what the future may hold and that's corporate insiders. These are C-suite executives of publicly traded companies who have access to non-public information about their respective businesses. They are now selling shares more aggressively than at any point in the past 12 months, with over 260 million shares sold for only about 4.2 million shares bought in the first week of January. The sell-buy ratio is now 63-1. That is an extreme that we've not seen in many, many years. Readings under 12-1 are considered to be bullish. Readings above 20-1 are considered to be bearish. This is more than 3 times the threshold of bearishness. And so we would basically suggest that when insiders are selling their shares, there's probably not a ton of good news on the horizon. But when they're selling their shares at 63-1 on a sell-buy ratio basis, they are outright worried about something. Final chart number 5. We thought it would be interesting just to take a look at what the market looks like adjusted for inflation. So what we've done is we've taken the NASDAQ 100 index and divided it by the PPI inflation rate, right? The producer price index. And, it gives us a producer price inflation adjusted view of the market. Now, in recent weeks, we've seen new highs in the Dow Jones Industrial Average, the S&P 100 Industrial Index, as well as the NASDAQ 100 Index. And the one thing that all 3 of those indexes have in common is that they are all mega cap indexes with heavy exposure to either some or all of the Magnificent Seven. Apple and Microsoft are big dominant names in the Dow. They are the two largest names in both the S&P 100 and the NASDAQ 100, but also Google, Amazon, NVIDIA, Tesla, and Meta are very, very large exposures in both the S&P 100 and the NASDAQ 100. And so, you've got this heavy concentration in just seven, mega cap tech stocks that kind of embody the whole new paradigm, view about AI and whatnot. And, what's really interesting is that those new highs have been unconfirmed by the broad market. So the NYSE composite, the NASDAQ composite, which together account for about 5,600 stocks. We've got the Russell 2000, the most liquid small cap stocks. And then we've got the Value Line Composite Index, which is the 1,700 largest stocks in North America by revenue, all equally weighted. None of those indexes are even close to making a new high. What's also interesting is that even the S&P 500 is yet to make a new high. Now, that could change, right? It is also heavily concentrated in the Mag 7, which represent roughly 29% of the market cap of the S&P 500. But to this point in time, the S&P 500 is yet to make a new high and confirm the Dow. Interestingly, when these indexes are adjusted for inflation using the PPI, the producer price index, none of them have posted a new high. None of them are even close to posting a new high. We've decided to illustrate the NASDAQ here today because that's what we've been talking about with respect to speculation. And clearly, adjusted for inflation, the NASDAQ 100 has only rallied back to the underside of its broken ascending trend line and is still holding well below pretty important chart resistance. So what do we take away from this? Well, I don't know. But it's food for thought, and it is to tell you that the inflation environment of the last, say, 24 months has had a lot to do with what's going on in the price action of individual stocks that make up these highly concentrated, Mag 7 proxy indexes. And so I would be very skeptical about those new highs, and I would be more concerned about what's going on in the broad market. We detail all of these concerns in our newsletter, so check it out, hugeinsights.substack.com. You can find that also on our website at www.jwhinvestment.com. You can also follow us on Twitter at alpha_insights. But to go directly to Substack and get that newsletter, hugeinsights.substack.com. Check it out. Thanks very much for your time, and good luck trading.